Morning, everybody. This is Josh Ezel, Breakthrough Real Estate and Property Management. Hope you're having a fantastic day. Um, Ultimately, this video is to quickly go over the stat newsletter, which just came out about an hour ago or so. And it is the armless newsletter of all the statistics in the MLS. And this is in particular for the month of December. So I'm going to go ahead and share my screen and pop open this newsletter here really fast. And let's go up to the top because quickly stated well, they said it perfectly here, right up here at the top. A year filled with challenges like none other transformed itself into the most successful sales year in armless history. And it is incredible what took place this year. So let's go ahead and pop up front here. Okay. We're going to take this one by one. So monthly sales. Okay. The 7,500 sales that you see there is really indicative of standard numbers, historically speaking. Okay. That is a great number, not just for 2018-19. But that is a great number for just an average for the MLS. Okay, so when you see that year over year, we're up 27.4%, that is huge. Okay, I mean, that is literally 25+% more than the historical average. And this is in December. Okay, December is the slowest month of the year. Okay, so when it's up 27%, you're taking a record year last year, and which is now an average. Let me rephrase this. Sorry, I kind of got off track there. 7,500 sales per month is your average month. December is typically not an average month. Okay. So it's typically down. It just so happened that 2019 was a record December to begin with. So that made it now an average month. Okay. So when I'm referring to 7,500 in that, I'm referring to the average month, not necessarily like your average December. Your average December is less than 7,500 if it was any other time in history, but we've been on record-setting pace basically since 2011, right? So we just keep getting higher and higher and higher. And the population of Phoenix keeps getting greater, greater, and greater. And you got more and more home builders. It is just exploding in Maricopa County. Okay. Wonderful, wonderful time to be a realtor or have anything to do with the real estate industry in Maricopa County. Okay, so when we say year over year, we're actually saying, historically speaking, this is 25% more than your average month in general, okay? And not only that, but it happens to be in December, which makes it all the more crazy that it took place, okay? So that is insane and that is awesome. Usually realtors are taking a lot of December off, but it did not this year, man. Wow. Okay, so check this out. New inventory. Okay, new inventory for December typically goes down because not many people want to list their homes in December, right? Between Thanksgiving and New Year's, it just kind of, right? But this year, we were up 14%. Okay, 14.6% to be exact. That means 14% more people actually listed their home in December than last year. Okay, that is saying a lot. Unfortunately, what does that mean? Well, we're also down 17% month over month. So while we had an incredible December compared to how many homes we sold in November and whatnot, we still lost in inventory. Okay, so that's kind of normal. I mean, it's always going to be November, December, but the December to December is what you really need to see here. We had 14% more people list their home in December than last year. Okay. that means it is up. We are hopping. Okay. So with these record sales, though, nothing can keep up. And with November, December, not much you can do. So January, it's going to start picking up. And then February, you'll see is when it's kind of like we're hitting our stride. February, March, April. That is the like, hot period, whatever you want to call it. Okay. So here we go. Total inventory. This is big. This is what these last two kind of culminate to. Okay. New inventory has month over month decrease of 21 points. Total inventory. Sorry. Total inventory has a month over month decrease of 21.5%. Okay. That's bound to happen. All right. If not as many people are going to list their home in December, typically speaking, not as many people are going to buy homes in December as well. So it's kind of like a natural drop that almost always happens during this period, right? But we're talking 21.5% month over month, which means we lost a fifth of our inventory. Okay. Year over year, we lost over a third of our inventory as far as the total inventory is concerned. Okay. Now, the big thing is total inventory is kind of a deceptive number because this includes UCB, CCBSs, and things like that, which they're technically under contract. So while they are there, they're technically under contract. It's not like you could walk in right now and buy that home. Something has to happen with that other contract before they could even consider your contract. So I don't really consider that active. You know what I mean? So total inventory should really be, if we're going to be honest, let's say we have, okay, monthly sales, 9,600 plus sales per month. Okay, so let's take this. Okay, you've got 9,666 sales, and typical normal market, let's say, is 3 months supply. So that means we should have 28,998 homes listed in this market. Okay, let's take the 7,500 mark and do the typical 3. So that's 22,500. So reasonably speaking, let's say we should have 24,000 active homes. Okay, 24,000 active homes. Right now, we have 9,791. But no, that's not accurate because let's go to the next one. Let's take away the UCBs and the CCBSs. Okay, that means there's really only 5,900 active homes. Okay, so if there's 5,969 active homes, okay, and there should be, let's say, approximately 24,000 available. That means, oops, I hit the wrong button there. Sorry about that. Let's do this again. 5,969 divided by 24,000 active homes. That means we have barely 25% of the supply we need. That's it. I mean, we literally have 1/5 of the supply that we really need. I really didn't need a calculator to figure that one out, I guess, right? But if we have 9,000 plus sales per month, how much inventory do we really have? Well, oops, sorry, I scrolled down there way too far. Sorry about that. Okay, so let's see here. 99, what was it? 9,666. All right. And by 56. 5969. Oh, so that means we have just about a little over half a month's supply of homes. That is insane. Okay. Oh my gosh, man. That is incredible. That oh, so yeah, 0.61 month supply of homes. That's what that boils down to. Okay, so that means if nobody lists their home today, no more people, right? And we just sell the homes, we will run out in about 2.5 weeks, 3 weeks. That is incredible. This is a truly historic time in real estate. If you're a buyer's agent, you need to be going above and beyond. If you're a listing agent, you should be telling every single person you know now is the time to list their home. Okay. So we kind of got ahead here. So there you go. Month supply of inventory 1.01. No, we figured that actually to be 0.61. And that is the truth. Okay. So new list prices. This one I have an issue with because list to sales price, the median versus average. Okay. Your average may be 442. The median is where we really want to be in this case. Okay. So let's kind of acknowledge there's a lot of expensive homes out there. There's a lot of people with very lofty goals as far as what they can sell their home for. But the reality is your average home is closer to 329 now. Okay. So your new list prices are up 10.8%, and the year over year median is up 11.8%. So let's pretend this is a stock market. Your stock went up naturally almost 12%. Okay. Now that's incredible. Historically speaking, you're looking at more 4%, something like that. Okay. So for anything to go like 5 to 10, you're having a good year. If it goes above 10, you are having an incredibly amazing year. But new list price doesn't mean much considering that's not what sells. Okay, so what's actually selling? Well, let's pull this up just a little bit. Look at that. Your average sales price is 333,000. So if the list price is 329.9, your sales price is 333. That means your sales price as a whole is higher than your list price of the home. Your average home is selling for more than asking price in Maricopa County. Okay. Your average median price is up 14.9%. Okay. The average home in the Valley has officially gone up almost 15% year over year. Not only that, because the selection has come down, your sales price is now above your list price as an average Maricopa County wide. How awesome is this? This is incredible, people. Amazing. Obviously, sales forecast, undoubtedly. I mean, it's going to take, let's just say, okay, we don't sell any homes, okay? And we just bring on new inventory. Okay, so let's bring on the new inventory of 6,300 homes per month. Okay, we are legitimately at active. Where did we decide? 56 or 5,900. So we need to be at 24,000 active homes. So 6, 12, 18, 3 months. It would take 3 months of no sales and just adding inventory to actually equal the minimum stable normal market. Okay. So of course the sales forecast is going to be going up. There's no way it can't. It's almost a physical impossibility. All right. So sales forecast 333 to 338, obviously up and up and up. Right on. Can't argue with that. Distressed properties. Here's one little thing that I want to raise to everybody's attention. Okay. Distressed properties show a decrease of 4.6, but the year over year figure was down 47.4%. Okay. So here's where you cannot argue with a COVID effect. Okay. Last year, 2,221 homes were distressed. Okay. And this is total. Okay, so you're seeing total as a whole just flowing. Okay, so foreclosures pending. Okay, doesn't actually say it's going to happen, and you're just seeing a monthly stream of pending foreclosures. Okay, so this isn't every single month 2,000 people got foreclosed on. This is how many people are in foreclosure at any moment. Okay, so obviously, since they put a the hold on the foreclosures, you're seeing a definite change. But here's where I want to put this number in perspective, because 47, well, what if those people all lose their home? What if they take this away? 47% of these people. Well, let's put this number in perspective. Last year, Before COVID, it was 2,221. Right now, it's at 1,169. Okay, so as unfortunate as this might be, we're talking less than 1,000 people if it went all the way back to the normal number. Okay, so you're talking Maricopa County has what, 6 million plus people in Maricopa County. So out of 6 million people, the normal number would be 2,221, and that number is down by 47%. Okay, so hopefully this number, when everything comes back, I hope it's not going to exceed the norm, right? And there's no doubt it's going to come back above normal because of the effect. But if 2,200 is the normal time, we might be thinking, what? Let's say it doubles or triples, okay? So let's say we have 6,000 people, 6,000 foreclosures out of 6 million people is not necessarily a horrible number. To put this back in perspective, at the fall of the market, we had approximately 69,000 active homes at one point. Okay. Of those 69,000 active homes, those were predominantly bank-owned homes and short sales. And there were almost no regular sales in there at that point in time. You had auctions, foreclosures, and short sales. That was the majority. Okay. So let's say 60,000 of those were fighting foreclosure. Okay. So 6,000 versus 60,000 versus 2,000. Okay. We're not comparing anything in the past compared to today. And we've learned a lesson, it looks like. Okay. So that's great. Let's take advantage of it. Foreclosures are down 47%. If they come back to normal, that's 1,000 people that might be getting foreclosed on. And if it triples, we're talking 6,000 people. Very unfortunate, but it is a manageable number. Okay. And I'm sure our community as a whole will rise and things will be done to take care of those people. Okay. So, yep. Distress sales. There you go. Right down here. This is it. So, yeah, there's few and far between. They basically don't make it up. Okay. Now, this is how we're going to wrap it up here. Days on market, down 18 days year over year. That is absolutely incredible. Month over month, of course, it went up 2 days because we're talking about Christmas. So it doesn't matter. Between Thanksgiving and New Year's, that always happens. Okay, so the big thing is, as a whole, down 18 days. If you factor in the change, we are at approximately 20 days less than average, which is cutting a third off our days on market. So this is an amazing time. Okay, everybody. What I want to let you know, if you're a homeowner looking at this, now is the time. Sell your home, move up. You have record-setting interest rates. Find that great deal on your home. Ride the wave. If you're going to move up, it's better to ride 15% of a $400,000 home as opposed to 15% of a $250,000 home. That is a big difference in equity. Okay. These record low interest rates mean that it has never been this affordable to borrow whatever amount of money you're going to want to borrow. Okay. Back in the 80s, your interest rates were at 15, 16%. Imagine borrowing $500,000 at 15, 16%. Okay. Couldn't be done by most people. Right now, you could borrow $500,000 and it's never been this affordable to borrow money. Okay. So this year, it is going to happen. You need to reap the benefit. If you're a tenant, oh my gosh, it's actually less expensive to own a home than it is to rent right now with the record high rents. So get your foot in the door. Doesn't matter. Get your foot in the door of home ownership. Start reaping the benefits of owning a home. All right. If you're looking to move down, now's the time. Cash out, man. Cash out. Buy your home, and you're still going to reap the benefit of appreciation in your new home. And you still, your net worth, everything. I mean, it's a win-win-win. Okay, everybody. If you have any questions, never hesitate to message me. I'm so happy to help. I hope this was beneficial. This was so fascinating. The moment it came out, I just had to share it with everybody. All right. Thank you for watching. I'll talk to you guys later.